Welcome, traders. My name is Adam, and welcome to this week's episode of Inside the Charts, brought to you by myself, Adam from Traders Precision, and Vantage Markets. So, kicking off here with the dollar index this week, I want to just talk very quickly about this very bullish candle that we had that closed here on Friday. So we had non-farm payroll. And of course, most importantly, please be aware that this coming week, Tuesday, is the US elections. It's one of the biggest elections over the last 70 years. So be prepared for market volatility. What will most likely happen if you are based in the UK or a similar time zone is that we will start to see the market reaction around about Wednesday morning as the last voting station is in Alaska. That will close at around about 8 a.m. Wednesday morning UK time. By that time, some of the results will be coming through from other states, so just please be aware of that. So here we had a particularly long move. I was expecting a deeper retracement, perhaps down towards the 50-period moving average. Friday produced a bullish engulfing bar. There is some resistance here, but still, keeping in mind that the election is close by, we might see a continued push to the upside. Let's compare this to euro dollar. Here you can see with euro dollar, we've got this very strong bearish engulfing candle. So we had a very strong move. We had a minimal retracement. We've got some strong support here and a bearish engulfing candle. It wouldn't surprise me if we see a break of the low of this and a continuation back down to test this support, this level of support, probably by about Wednesday. So that would be my first expectation, and to see if we subsequently get a bounce off that level. However, of course, the one more thing to keep in mind is that Monday we could see a reversal. So really what I'm going to be looking for is a break of the high or the low of Friday's candle. That will likely hint at where it's going to go over the coming week. In contrast, sterling is starting to look as though it wants to slow down. We've got some strong bullish wicks and a little bit of bullish divergence here. So this week I'll be expecting to see this look a little bit more sideways, possibly even attempt to push up a little bit higher. And of course, then looking at Australian dollar against the US dollar, you can see this trend is very strong. The dollar is really strong at the moment. That is creating a lot of these long sustained trends, and that is why I just wanted to highlight how strong the dollar is and why we might see that push on, especially keeping in mind what's happening next week. One chart in particular that I want to illustrate how extreme this is dollar CAD. So on the daily here, you can see we had this previous move, 5th of August, all the way down to the lows. We had a double bottom. We broke the lows here and had continued in almost a single sustained move until we broke the highs. This is very rare, ladies and gentlemen, to see such a long sustained move for 20 plus days without a serious correction. This is very much overdue for a correction, and this is a very unusual move. And so I use this to illustrate the kind of conditions that we are sitting in here, just saying that the markets are definitely due for a correction, but at the same time, this could be similar to gold. We could just see that extended move, and we'll have a look at gold in a minute. So here's another one, dollar yen, for example. I would have expected, again, also a deeper pullback, but it has actually already retraced into the moving averages, producing a bit of a bullish candle here. A little bit of resistance, but this could in itself be a trend continuation setup. The trend overall not looking as overextended, and it has at least, the moving averages are now in a bullish formation, so I quite like this as a potential move to the upside, but I, again, cautious for obvious reasons. Gold has pulled back into the moving averages. Overall, the trend is really strong. For me, my main concern is how overextended it might be on the higher time frames, such as the weekly and monthly. So looking here at the weekly, we could see we had a gravestone doji last week after a very, very long run. A break of the low of this could see a retracement back down to the 2650, sort of $2,650 level. So I'm just going to be prepared for a potential correction on gold this week. And if we look at the monthly time frame for gold, you can see it is very overextended. So this is why this coming week is going to be interesting. If we finish with a weekly bearish candle, this might indeed actually be hinting at a deeper pullback from a monthly perspective, putting us at around about the $2,500 level. Here we have a look at crude oil. Main thing is that this downward trend of lower highs, lower lows is still intact. So there's a lot of pressure on the bears testing this level here around the $68 mark. So that's really keeping an eye out to see if we do get that breakout. We can see the MACD continues to trend lower. And my real question here is, will we see a breakout to the downside this coming week? Next up is the Dow Jones, which produced a slightly bearish candle for the month of October. And if we break the low of that, we could also see a little bit of a deeper correction down towards that 40,000 level. So again, I'll be looking for breaks of the lows of these candles to see if the market is going to indeed trigger that correction. Let's compare that to the NASDAQ. In comparison, the NASDAQ is definitely struggling with some resistance here. You can see a lot of bullish candles previously, but not really able to move on beyond that 20,000 level. Part of that could be because it's had such a very big run. It really does just need to take a bit of a break. And the last one for this week's episode, just having a look at Alibaba having had that really nice breakout coming back into the moving averages. And this is what I'm going to be looking for now over this week is breaks of the highs of these previous candles here. That would signal to me that it is getting ready, it's testing support and looking keen or ready to do the next leg up. So there we go, ladies and gentlemen. I want to wish you the very best this week. Manage your risk, sit it out. Do not try to trade the election, and just monitor and watch how the markets react to it. For the most part, the markets will or potentially have already made their minds up as to how the election is going to play out. And so let's potentially just watch from the sidelines, trade and risk responsibly. Thank you very much.